Good evening. Today I have another update for Greaves Cotton. It has a market cap of 4,667 crores. It's a small cap EV stock. It has been in focus with a 10.5% 8% jump following its Q4 FY25 results. So 2 rupees dividend recommended per share. We'll go through those details in the following slides. Just an update about the company. The company is an Indian engineering company with a long legacy, founded in 1859. Traditionally, Greaves was best known for manufacturing diesel engines, pump sets, gensets, serving automotive, industrial, and agricultural sectors. However, in recent years, Greaves has strategically transformed itself into a clean mobility and electric vehicle player. So, disclaimer: the investment tips expressed by the investment experts, broking houses, rating agencies on the internet are of their own and do not represent any of my personal opinion. Investing in equities possess a risk of financial losses. Investors must therefore exercise due caution while investing or trading in stocks. The author of this article is not liable for any losses caused as a result of the decision based on this article. Please consult your investment advisor before investing. We'll go through some other information here. Alright, here we go. So this is the current price. It shows it's 197, up 3.8% today. Last 5 days a minus of 2%. The last 1 month you can see a minus of almost 8%. Last 6 months positive of 5.6%, and amazing return over the last 1 year of 39%. So not keeping in mind the correction in the market in October, we would have seen a higher growth in this price of the stock, which is a very good sign. It seems to be doing very well. This is the logo of the company. These are the different model of products that the company is manufacturing, or uh, maybe uh, engines that it manufactures for the various companies. So this is another sample for your view. Ownership strength is slightly below the benchmark. Stock market price justifies the intrinsic value. Company could improve its asset employment. Company possesses stable growth history and manageable debt. Face value 2 rupees, price to book value of 3.3, cash 216 crores, debt 0 crores, earnings per share 7, promoter holding 56%, sales growth 15%, return on equity 24%, profit growth 147%, return on capital employed 31%, price to earnings ratio of 28.4. This is the graph. Public holding is 38%, DIIs and FIs make up about 6%. So there is a high chance of price volatility and stock volume business volatility because of high public holding here. Uh, Graves Cotton is engaged in manufacturing of engine applications and trading of power tilers, spares related to engine, electric vehicles, and infrastructure equipment. Then you can see book value 60, current price 200, high of 320. Return on capital employed is 5, and return on equity is minus 0.4%, which again is a cause of concern. Not able to provide good return on equity. Company is debt free. Company is maintaining a 24% dividend payout. Stock is trading 3.3 times its book value. Company has low return on equity 2.33% in the last 3 years. Earnings include another income of 56 crores. Debtor days have increased to 42, nearly uh, 30% increase, which is a cause of concern. Comparison: Cummins India, Kirloskar Oil, Swaraj Engines are the three peers and competitors of the company. Then sales have increased, which is a good sign. Operating profit has also increased. Company has turned profitable, however, it's not been able to meet up to its expectations compared to the last quarter. 6 crore net profit compared to 1.5 crore that it has uh, given in the March quarter. Again, it seems like a seasonal business scenario here. Then we look at the overall yearly performance. Uh, the last 2-3 years hasn't seen much of a sales growth. Profit has gone down. Company now is at a loss, making a loss, 360 crore loss in the last year, and this year company has a loss of 6 crores. So this is a cause of concern. Probably the company is not able to get a good market share of the business transformation it has done into the EV sector. So it's a small EV company. So the earlier it is able to break even and uh, project its position in the market, only then would it be able to start making some profits. So you can see sales growth 11%, profit growth of minus 124%, then stock price growth of 41%, which is again amazing. Return on equity has been zero in the last 1 year, 2% in the last 5 years. So in the last 5 years, since probably the COVID-19 and the change of business transformation, the company has been able to only achieve a return on equity of 2%. Then the reserves have slightly reduced, probably because of the loss the company has made in the last 2 years. Then the other liabilities have increased again, so again it's a bit of concern that the company will need to keep its borrowings in check, overall liabilities in check rather. Sorry. Debtor days have increased by 30%, inventory days have also increased by about 10%. Days payable, company is not able to pay its suppliers on time. It is taking about 20%, 25% longer to pay its suppliers. Working capital has gone up drastically from 12 days to 57 days, so it is struggling to able to sell its products or marketed products. Then as I said, 38% public holding could lead to high price volatility of the stock and high can end up in the oversold zone as well. High amount of shares that could be exchanged on the exchanges. So friends, that's it for today for this company. Thanks for watching. Please share this with your friends, family and associates so they could benefit out of this information. If you have any suggestions to improve the content, please share this and comment below the video so I can make the necessary changes and try to make the video and the content more better. Thank you so much for watching.